Hi, I'm Peter Switzer. Welcome to the program which puts you in touch with the best and brightest minds in the business. On tonight's show, why isn't our market heading higher like Wall Street? And how should we be playing this market? Our sector expert, an expert on many things, Ron Bewley, will give us his latest take on where the market is going and what sectors are the best buys right now. And he's also going to look at some portfolios that you might be interested in. And on a day when JP Morgan in the USA told its clients to go long on Europe at the expense of US stocks, we will look at how you can play overseas markets with Russell Chesler of Market Vectors. And later in the show, we go to the RBA Governor, Glenn Stevens, and he speaks to CEDA, which has been billed as a very important one from the boss of the big bank. Sure, Glenn is no excitement machine, but when he talks, the markets listen. Stay with us for the next hour and we'll bring you all the latest corporate news and market analysis, plus learn some valuable lessons from Australian success stories. If you have any questions for me or our guests, email them to switzer@switzer.com.au. And you can follow me on Twitter and the handle is @PeterSwitzer. But first, while Wall Street keeps marching into record high territory, our stock market is giving into gravity day by day. But is this just a temporary phase? And how should we be playing the market going forward, especially given that November and December are historically good months for stocks? So let's catch up with Ron Bewley of Woodhall Investment Research to see how he's investing, given his access to a virtual army of analysts. Ron, how are you going?
I'm good, and you?
Excellent, mate, excellent, despite a slow start. Now, Ron, tell me about what you think's going on in the market right now. You heard how I described.
Yes.
Yanks are doing well. We seem to be sort of going sideways or a little bit down.
Yes.
Why?
There are a number of reasons. One is that, our market wasn't looking that good because of material stocks, the miners. That has to take a lot away from us. And also, as I said about this time last year, the banks couldn't go up anymore because the high yield stocks, the prices have gone up so much they've driven down the yields to about 5.1%, 5.2%. So they couldn't go up anymore. So because of the nature of investors in our country, we couldn't have the same legs that they did over there. But I would argue that things have been a lot more predictable than you and others. I know that isn't necessarily your belief, it's just a question. Because I've been on this show probably every month for the last few years.
Yeah, for a lifetime.
And all right, so everything I'm going to talk about tonight is just an update on what I did before, which is putting order into the disorder. So I've actually invented 2 new financial products for myself. I don't sell them. So one I was on almost exactly a month ago, where I talked about this geared portfolio that lived off some new techniques. And I spent 6 months designing a yield portfolio, which is a hybrid between growth and yield, which I launched on the Switzer Super Report. And I can show how that's going and why it's all sort of working. So it's not really a surprise to me.
Okay, so Ron, this is the interesting thing that you're saying. It's geared and it's yield.
I know, there's 2 separate portfolios. One's in my super, that's the yield. Outside my super, because I can't I'm getting some extra money by having a geared portfolio.
A geared portfolio. Yes. But is there are the yields inside that no. So it's going for capital gain. Okay. So let's start with the first one, the first slide first, which you've labelled inside the box.
Yes.
S&P 500, right?
So we like to think inside the box, and this took me about a year to develop this as a product, and I put serious money into it just over a month ago.
Okay. To test it out.
To test it.
You were a bit like Frankenstein, Count Dracula and Frankenstein. Anyway, go on.
But I don't think you should have the right to tell people what you think you're doing if you don't do it.
Correct.
So if we can go to the first one, if you don't mind, I'll put my glasses on so I can read the numbers better. What you see there is the S&P 500. Last month I showed the ASX 200.
The red line is the S&P 500. Yes. There's a big correction and the V-shaped ping out.
But if you look at where that correction hit the bottom black line, that was when I was on the show last time.
And you were optimistic, Ron.
I said buy, and I borrowed a serious amount of money to get into this. But before we get to that, what are the 2 black dotted lines?
Yes, good question.
I try to predict not just the end of the year, which is the black cross on the right. I predict the lowest in the year and the highest in the year. Okay. So I know if I'm inside the box, life is good.
So you got the S&P 500 going up to 2,250?
That's a high point, but that's a little less likely now because we've hit the bottom. The 2 things are not independent.
Okay.
So having got to there, we're now probably a little fraction off that. But
So, and we're currently at what, 2,020 something?
Something like that.
Yeah.
And the forecast for the end of the year was 2,130, and that's now higher at 2,150.
Okay.
So
you believe that the S&P has a chance to get to 2,150 before New Year's Day?
No, sorry, this is the financial year.
Financial year.
Sorry, I didn't make that clear.
Okay,
yeah, financial year.
So by mid-2015?
June 30.
Okay.
Because you can't predict the next month. It can be
no. Okay. Right. Okay.
So the blue dots are the updates with the new information. So there's not much difference. So in other words, everything is on track.
Yeah.
So that's why I back my convictions as I do, because I've been doing this sort of stuff for a long time.
Yeah.
When we hit the low point, you're going to get a free kick.
Yeah.
The market's going to go up, and it's a no-brainer to do this. And I did exactly the same thing on the ASX 200. Yeah. And I showed that chart.
So is the low point you had then, is that going to be the low point if this market sells off again?
That's still the low point. Yeah. Given my June 30
That's always
forecast,
going to be the resistance point that you think this market's not going to go through?
Yeah.
Okay.
Yeah.
All right, at least for the next...
Till June 30th.
Till June 30th. Good. Okay.
Yeah. So if we now turn over, if we may, there's now a graph, and this is sort of...
This is the geared portfolio?
Yeah, and this is really exciting for me because it's the first time I've gone international.
Yeah, okay.
Really. And the blue line is nothing but the S&P 500 since I bought.
Right.
But as you can see, the S&P 500 doesn't start at 100. I've just rescaled it so I can get it on the chart.
You're an econometrician. You can do things like that. Okay.
So imagine putting $100,000 in.
Yeah.
What would it be now? The yellow line at the bottom is the ASX 200, and as you correctly pointed out, it's sort of given up the charge a little bit near the end.
You're up about
about 3.5%, I think it is.
Sure.
It changed a little bit today. These are based on last night.
Okay, fine.
Yeah, and the red line is my sort of 50-50 portfolio.
Okay.
But it's wrong to think...
50-50 of what?
Sorry, 50% S&P 500, 50% ASX 200.
Yeah, so you're splitting between the US and Australian market.
Yes.
Right.
And as you correctly pointed out last time, this ETF I'm using is unhedged. So if we're going to get in trouble, I'm going to get the extra double whammy from the currency fall.
Yep.
And if you look at the red line, which is what I've actually earned in the space of a month by backing myself, the red line should be high because it jumps up and down a bit, this foreign one, so it went up 1.5%.
Well, the currency was as low as 85 something, and now it's at 87 something.
Yeah, but it went up 1.5% today, that index, so it should really be about 108 or so. So making over 8% in a month isn't bad.
That's not bad.
Yeah.
Not bad.
And I'm backing the horse both ways, so if the ASX 200 doesn't do well, the currency won't do as well, I'll be gaining off the other one. And if we do well, they both do, we're all happy.
Okay.
So that's a straightforward thing. And what I would actually like is, I'd like the market to drop a bit because I didn't put as much money in as I wanted.
Yeah, so you want a second chance.
Yeah, and I thought I'd wait a few days to have a second chance, but it just zipped up so much.
Okay, well, I'm sure people are going to be interested to see what stocks you've got in this portfolio. But
well, they're just two indexes. I can give you the codes, IVV.
Yep, IVV.
And IOZ.
Okay,
they're both beta shares, I think.
Okay, fine.
Yeah.
Let's go to the next one.
So let's go to the next one. And this is my, this is the story of how I look at my portfolio. Yep. And this is the one I put in your website. And these slides on my website too, people want to read all the numbers.
Okay.
And because it's a longish list, I've broken it up into two lots. There's no difference in the left and the right.
Okay.
I just couldn't fit them all on one page.
On the page, okay.
Yeah.
So just quickly run through the stocks in question.
So Sydney Airport, Transurban, Cardno, Tats, Primary, Suncorp, IOOF, Bendigo and whatever, Bank of Queensland, Macquarie, Federal Centres or something, Property Trust, Stocklands, Dexus, Telstra, GUS and Ski.
Okay, and you selected these primarily on what criteria?
There are a number of filters, and this is all automated, so I don't really have much judgment in it.
Yeah. You've never had much judgment. That's good that you actually make it objective.
But you see,
But are you driven by your analysts?
Oh, yes.
Your army of analysts.
Yeah.
And people have to understand this. This is not Ron Bewley making his own judgment call. You survey all the analysts to come up with your selections.
I make my judgment of what I'm going to do with them.
Yeah.
So unless they get a certain rating and I choose that number, you don't get into the list. Unless you've got an expected yield of a certain amount, you don't get into the list. The number of stocks you get into each sector depends on other things. The sector weights depend on other fancy numbers.
Now, Ron, are you still happy with these stocks?
That's what I wanted
if the
to talk
market
about.
falls again?
Yeah. But going to be, look at the bottom right-hand corner.
4.1%.
Yeah, no, that's my outperformance. So the market's done 0.2 in 5 months. And I've done 4.2, making I'm 4.1% better off. Because it's been a yield market, it's an easy play. So I'm loving this, and I do a new one every month, and that's on your latest.
Okay, all right, but are you advantaged by the fact that there was a serious correction and there was a bounce back?
No, because I do one every month, and they're all over the place, but the outperformance is always between about 4 and 6%.
Okay, good.
So it's a system that's working, and I really like it. To give you an example, look at CDD, Cardno.
Yeah.
It's some international environmental thing in industry.
It's an engineering company, Cardno.
Yeah. But they do environmental stuff too, which
yeah.
I should have actually filtered out. But, but it's down 20%. And the question is, should I have got rid of it? And there are two schools. I thought you'd say yes, but Macquarie was down a lot at one point, but that bounced back.
Yeah.
And the reason I haven't sold it is because the ratings by the brokers has actually improved over this time period, and the target price is well above where it is. So I'm just going to sit and wait.
Yeah,
but had they collapsed, I would have flicked it.
We might try and get the CEO of Cardno on the program. I have met the chairman of the company. Okay, let's go to the next slide, Ron.
No, just before we do that one, but if you look at the 0.2 for the ASX 200, almost no stock, except for that one. There's only 2 other stocks that were worse. So this is a good way of doing it. And what I want to do now, showing on the next page, is what the new recipe is. So the November the 1st one.
Okay.
Now, I don't want to change from that. I'm happy with mine, because I know they all work. But at some point, it's going to get tired and old. I'm going to do it. So if we move to the next one, which I think we have now, the ones in red are the stocks that were on the previous page.
You carried over. Good,
so 7 stocks vanished.
Your JB Hi-Fi's been thrown in there.
Yeah, 7 stocks vanished and 5 entered.
Yeah.
And that's based on this. Should I change? Well, you could, but there's all that mess of buying and selling, and you can lose on spread. So I'm not worried about buying at all. But look at...
How many stocks in total do you have in your portfolio?
It varies. This one's 14.
Yeah, and the other one was?
16.
So put them together, you probably get the 20 stocks that I like in the portfolio. Yeah, you probably would.
We've all got our own choice. But I have to do what I believe in. Otherwise, I don't know how to control things when they go wrong. But if you look at the bottom right-hand corner, the market is down 1.7% in the month. And this one is flat. So even in the short run, it's just far more robust. Until the American interest rates start to go up, I think this is the only way to go.
Yeah, I feel you're right. When rates go up, our dollar go down, that's going to be another
so at some point, because I'm not going to wait this till the day I die, at some point I'll make a decision to change things.
Yeah, and you'll come on here and tell us.
Well, if you invite me back, of course.
Of course I will. But also, Ron, the important thing for people who go to your website or my website is that the weights are important.
Oh, yes, yes.
Some people might go,
they're not equal.
For $100,000, cost 20 stocks, but $5,000 each. No, have a look at the weights. Buy in proportion to those weights, because those weights are important for you, aren't
they?
So
diversification doesn't mean have a bunch of stocks. It means have the right amount of each one. So if you look at, say, PPT, which I think is perpetual, that's 11.5%. JTX, which I think is James Hardy, is only a third of that, quarter of it. So mate, massively different.
Unfortunately, we are out of time.
Okay.
But as I say, if you want to try and pick up on these portforoos, they're on the Switzer Super Report.
I just wrote a long thing for you.
Yeah, on our website,
and the stuff on mine.
And go to Woodhall as well.
Yes.
Excellent, mate. Thanks for joining us on the show.
Pleasure.
Always insightful. After break, we ask the question, even despite the negative views on Europe, is it time to go long on Europe?